at the NWR Virtual Resources Conference. We're going to kick off now with MRG Metals ASX code, as you can see on the screen, MRQ, and its non-executive chairman, Andrew van der Zwaan. Andrew, over to you to present the MRG Metals story.
Thanks, Kerry, and thanks for all the viewers out there today. My name is Andrew van der Zwaan. I'm non-executive chairman of MRG Metals. We're a small heavy mineral sands exploration company. Page 2 is just a standard disclaimer, so I won't spend a lot of time on that. If you look at the corporate snapshot for MRG, as I said, we're a small company under 10 million market cap. We have currently about $1 million of cash in the bank and no debt. Shareholdings, the board of management, myself and Chris Gregory and Shane Turner on the board. We hold about 8.2% of the company. So we're heavily invested in the company and supporters. The top 20 represent about 30.83%, and the top 50 is just close to 50%. Significant changes to our senior management structure in the last few months. Some of you may be aware, Mark Alvin, who was one part of the vendor of the projects that I'll talk about in Mozambique, he has now moved to a consultancy role. He's based in Perth, integral part of the team, knew the projects very well, speaks Portuguese and has been an integral part of our development so far. But given that we can't travel out of Australia with COVID, we've been fortunate in Mozambique to be able to continue operations, but unfortunately, Mark hasn't been able to travel. So we've come to a mutual agreement. He'll continue to provide us technical consultancy arrangements. But we recently put on the ground in South Africa, based out of South Africa, Kobus Bandenhurst, who knows the project well, works with a number of heavy mineral sands companies. So we're very happy to have him on board, and Mark will continue to work with us. So it's a small team, but a very specialised team. Small board, just 3 members of the board, and a team based in Mozambique, supported by Mark and supervised directly by Kobus. And we have consultants in country, legal teams, administrative teams, accounting, and we also have field geologists and a junior team in the field. So we're well structured, fairly lean and mean, but we've been able to continue operations in Mozambique over the last 8 to 10 months, where some others haven't been able to do so. So that's a positive for us. What are mineral sands? For those of you who don't know, heavy mineral sands predominantly comprise of 2 main componentries, titanium components. Some of you may know them as talk about ilmenite, leucoxene, and rutile. Rutile is basically pure titanium oxide. And the other key component is zircon. Now, zircon is a very valuable product, and as is rutile. And we're predominantly a rutile / titanium ilmenite play. So what are the uses of mineral sands? The titanium componentry is used as pigments, but welding fluxes as well. But one of the key elements, one of the key uses of titanium is in its alloy form, and you probably know that the alloys are used in the aerospace industry, high strength alloys. So when we look to be an ilmenite play, we're predominantly producing ilmenite to ultimately produce titanium oxides. Zircon is used as in ceramics predominantly. But what's of interest for MRG is ilmenite. That's what we're looking for, and zircon acts as a credit to us. And this slide gives you a bit more detail as to what mineral sands looks like. As I said, the componentry of the mineral sands, ilmenite and zircon, rutile, you can see on the right-hand side the values. Ilmenite's about $300 a tonne in various forms of concentrate. Rutile, $1,700, and zircon, as you can see, $2,200. Now, we have a view that titanium oxide long-term demand is growing, and that's where I think there's an opportunity for MRG. The industry has been fairly subdued over the last few years, but we see that the cycle's moving in our favour. So as I keep saying, we're predominantly an ilmenite play with significant zircon and rutile credits, and we think we're in the right space with the market moving to our advantage at least in the short term, and long term looks promising as well. Okay, so who are we? We're operating in Mozambique, in one of the best mineral sand provinces in the world. What's positive for us is we own 100% of our projects. We've got over 750 square kilometres of granted exploration licenses, which is enormous for a small company of our size. We have additional ground pending approval. So we've got 4 approved tenements at the moment, 2 of which we've been operating on in the last 12 months. The other 2 have just recently been granted, and that's a big fillip for us moving forward. The 2 projects I've been working on the last 12 months, the Corridor Heavy Mineral Sands. Previously, those projects were owned in addition to Corridor, the projects that we own. There's Corridor, the main project is owned by the Chinese just to the north of us. Those 3 projects were previously owned by Western Mining in a prior life, which was taken over by BHP. BHP didn't see that from a scale perspective, being a massive organisation, they didn't see this as one of their key projects, so they let it go, and therein lies the opportunity for us. The interesting thing was Western Mining at the time when they had the project, this was going to be one of their key projects, and they had earmarked to spend over $1 billion on the Corridor project. So we think we're in the right place with a great opportunity. We've already achieved a JORC resource at one of the targets. I'll talk a bit about that in the next few slides. We've got ongoing work programs, and we've got multiple targets within Corridor. But as I said, recently we've just had approved and granted by the government Morea and Maraka. They're in the orange shown on the map, and we think that has great along strike potential from the Corridor 1 project shown there. And we'll be coming out with some information shortly about that, but we're very excited about Morea. And again, if you look, 385 square kilometres for a small company of our size is a great opportunity. We have another project along the coast, Linyuan, that's still up for, still waiting for approval. It's been an application for a number of years, but we're working with the government hopefully to progress that. And we're obviously now well situated in the space. We've got people on the ground, so we're looking at other opportunities in the market. Just quickly to talk about why we're so excited about where we're at. We've got world-class neighbours. We've got the Rio Matumba joint venture with Savannah up to the northeast of us. You've got the Corridor Sands project just to the north of us I spoke about. They're spending over $1 billion. In Mozambique, you're probably aware that Kenmare is one of the largest ilmenite plays in the world. It's a major operation and produces a significant portion of the titanium oxide produced in the world. And there's other plays going on in Mozambique. So we're in a good place. The Mozambique projects to date, we've already had successful JORC resource at one of our targets called Koko Massava, over 1.4 billion tonnes. It sounds easy to say, but 1.4 billion tonnes in this industry represents upwards of 70 to 100 year mine life potential. So it's a significant size opportunity. And that was the first target that we went for, and it's the first JORC resource we've produced. We see this as a foundation for multi-decade mine life, but we still see significant exploration upside, and that's what we're focused on at the moment. We know we've got the 1.4 billion tonnes at 5.2% heavy mineral sands, very high grade, in the bag. What we're now looking to do is find the best 5 to 10 year operation within all our tenements. Now that may be within Koko Massava, but it may be in one of the other targets that we have. So we're working on that at the moment and that's our key focus from now and moving forward into 2021. And we've got an exploration record that's proven. We know how to do it, and we can prove up tonnage very, very cost effectively. So just going back to how do we find Koko Massava? Well, within the Corridor projects, we originally identified 13 prioritised exploration targets throughout those, Koko Massava being one of them in the top target number 1, is highlighted in that chart. So when we bought these projects, we took all the historical data. There'd been limited drilling across the entire Corridor Central and Corridor South. We took that data, we did airborne, magnetic and radiometric surveys, and we identified 13 targets. And that's the methodology we've been using effectively. Within Koko Massava, it's our maiden JORC resource. We've proven up 1.4 billion tonnes at 5.2% at a 4% cutoff. Most of that's inferred resource. Some of it, a significant chunk, though 300 million tonnes is still significant, is indicated. We will come back and do further infill drilling at a later stage when we need to, but we've also identified within Koko that there's pockets within Koko itself that will satisfy that 50 to 100 million target. We've got a number of them. We'll come back and drill those at a later stage to prove up these hotspot targets at Koko. But what's the significance within Koko Massava itself is whilst we had 1.4 billion tonnes at 5.2%, we had over 700 million tonnes greater than 6%. So there's a number of high-grade pockets within Koko, and we'll need to follow that up. In addition, we know that not all of the area was satisfied JORC requirements. Again, by some simple infill drilling, we think we can raise another 900, increase the target by 900 million tonnes easily. So Koko Massava on itself is a massive resource. This chart just gives you a quick look at the grade tonnage curve. And the important thing to note here is how much tonnage we have greater than 5%, heading up to small pockets, even above 7%. So there's certainly opportunities to high grade that resource and look at how we can, from a mining perspective, look at how we can get to that high grade resource cost effectively. This chart, I won't spend a lot of time on this. It gives you the breakdown of the indicated and referred and the assemblage within. But it's just highlights that Koko Massava sits as one of multiple targets, and the ones below NHACUTSE, Poyombo, represent some of the other 13 targets that we have. And then we've got Maria, Maraka, which have just been granted. They're 2 new tenements, and then hopefully in the future, Lenuan. So we've got plenty on our plate. We've already put away a JORC resource, so we're now just trying to high grade the tonnage from all of our projects. So the Corridor projects, one of the significant parts about Corridor that excites us is there's a major infrastructure play occurring within Mozambique. It's not just about Corridor, it's about train lines running through Mozambique and all through the central part of Africa. But fortunately for us, the rail line runs straight through our property and will include a wharf facility directly south of us, 10 kilometres south. So this project certainly has some infrastructure advantages that just other projects won't have. Now, how long will it take for the project to be built in Africa? That's a good question. They're targeting 2023. We'll see how that goes. But the great thing is that at some point in the future, this project will be developed, and any mines that are developed near or close to this railway will have a substantial infrastructure advantage. So we're pretty excited by that. As I said before, one of our key elements, we put away the 1.4 billion tonnes in our first target, which was a great outcome for a small company. We know we can find resources at less than $1 per tonne JORC resource. So what we're now doing is using our limited capital funds to try and find the best 100 million tonnes of resource across the entire portfolio. Now, it may sit within Koko Massava, but we've already identified at 3 of our other targets mentioned there, NHACUTSE, Poyombo and Zircon, that there's significant surface area supported by downhole high-grade areas that we think we can find that 50 to 100 million tonnes as the initial mine life. And when I say 50 million to 100 million tonnes, that would probably represent certainly upwards of 5 years, but probably 7 to 10 years of early mine life. And that's what you need to kick off the economics on these projects to support the capital investment. And you really want to get the get the economics right up front so that you can survive through any price cycle. So that's why we're so focused on finding the best 100 to 50 to 100 million tonnes. Just quickly, I'll take you through some of the highlights of what we're doing outside of Koko. NHACUTSE East looks really interesting to us because one of the things we found when we tested the assemblage, which means the content, what are the constituents of the heavy mineral sands in that area? And we found that out to the east, we have extremely high ilmenite percentage, up to 68% ilmenite. And obviously, as you increase when you increase the valuable mineral componentry, then your overall grade requirement reduces. So whilst at Koko East, I think we had an average of around 40% ilmenite. We did have areas as shown on this table at 50%, but if you can get it up to 68%, then obviously 3% heavy mineral grade is equal to sort of 5% at the lower assemblage. So we're looking to match not just high grade THM, but we're also looking to get high valuable componentry. And if you look at some of the great mineral sand players in the world, Kenmare, for example, they operate at 3% heavy mineral sands overall, but they've got close to 70% ilmenite in their sand. So there's two ways you can reach economic grade. It's a combination of high base grade and moderate assemblage, or lower base grade with exceptional assemblage. So we're trying to look for opportunities in both those spaces. And NHACUTSE, so that was the high assemblage area. Out to the west of NHACUTSE, we've found a high grade zone, and that may help us achieve 100 million tonnes in that part of the target as well. Similarly, at Poyombo, we've identified a number of high target zones, some of which 6 to 8%. So again, great opportunity to feed into that 100 million tonne, and we've got more work to do on these targets into 2021. So some of the upcoming milestones for us, we've just completed our last infill program at Corridor for this year. We're heading into the wet season now. So those drill programs have just been completed. We'll be looking to do community engagement at Morea and Maraka as we focus on those areas going forward. We'll commence reconnaissance auger drilling at Morea as soon as we can. We'll be feeding back assay results from all the drill programs we've completed this year. It takes us about 12 weeks turnaround to get assay results out of the Perth lab once we get product moved from Mozambique, through Mozambique borders, through quarantine, etc. So we'll be putting out a lot of assay results in the near term. And then basically we'll be providing information to shareholders as to what are our plans across Morea and Maraka into 2021, and what are our priorities to prove up the work we've already done at Corridor Central and Corridor South. So for investors, what's the opportunity? Well, we're 100% owned. We own all our tenements 100% outright. And we've got additional ground waiting for approval, and we're also looking for opportunities. So we're certainly looking for in the right space, and we've already got good tenements, but we're also looking for opportunities to expand as we can. We've already proven up a JORC resource, and we've got looking for the priorities I spoke about within that and outside the other targets. We can do low cost exploration, probably best in industry, less than a cent a tonne of a resource is outstanding. So we can take limited funds and spread them out quite substantially. As I said before, we're looking to turbocharge the economics by finding the best 100 million tonne to augment our billion tonnes already. We've got a high calibre team on the ground with a proven record of discoveries in Africa. We have a good set of expertise within the company and knowledge. We believe, I mean, obviously it's got to be tested through scoping study, but we believe we have a low-cost mining operation potential with limited strip, and potentially zero strip if we can get to the right tonnage at grade. We've already know from we did a benchtop metallurgical work that the product is amenable to simple separation, so that also reduces the cost of mining. We can also, through low-cost roasting, remove the chrome within the ore body very effectively and reach what's important with titanium oxide is the quality of the or the percentage of titanium oxide you produce in your concentrate, and we're comfortable that we can get up to 50% titanium oxide within the concentrate itself. That may not mean a lot, but it brings a whole range of potential buyers to the table when you can get to that magical 50% titanium oxide. We certainly believe that we've got our hands on one of the largest discoveries in the last decade or so. So the opportunity is we're a micro cap, less than 10 million, and we're sitting on multi-billion-dollar in-ground resources. We've just now got to prove up how we can get them out of the ground effectively and move from exploration to longer term, get to feasibility. But we see ourselves as a junior exploration company, and we certainly think we're on track to become a significant HMS discoverer.
Thank you, Andrew. Very, very good overview there. And how exciting that infrastructure, all those advantages you have going straight through. That's amazing. I didn't know.
It is very unique. We didn't, when we acquired the projects, we didn't actually know that. We had some indications that the rail lines were running nearby, but we had no idea they're actually going to run through the tenements. So.
Yeah, that's put a smile on your face. Look, I've got a lot of questions here. We don't have a lot of time left. Let me go straight into them. Does your company, Andrew, intend to mine the deposits themselves or sell the tracks to other existing miners for harvesting?
Well, thanks, Kerry. We see ourselves as an exploration play. We'd rather stay in the exploration game. We've developed a methodology, as I've said multiple times, that we can find tonnage very, very cost effectively. So our preference would be to take these type of projects through to JORC, which we've already done at Koko Massava, through to scoping, and then either get a big brother to come in joint venture with us and develop it, or we'd sell the asset at that time. Now, we do have the skills on the board. Chris Gregory's run mining operations throughout the world, so we've got the capacity, but our preference would be to either joint venture with an operating partner, so they take over the operation and we continue exploring elsewhere, or just sell the asset outright.
Yeah, that makes a lot of sense. Look, there's been you have also had a lot of strong announcements recently, but that share price is still languishing. So I've got to bring it up. What are your thoughts on that? What do you believe it's going to take from MRG to really get investors to see value? Because it sounds to me like these projects are very valuable. What do you see for that in the short to medium term?
Well, as a major shareholder, I can feel not so much pain, but just frustration, I suppose. We've seen the share price run a few times, but it hasn't been able to find traction at higher levels. It is frustrating when you think that we know that we've got more than $10-20 billion worth of in-ground value of resource. I mean, these numbers are massive, right? Now, obviously, what's important, though, is can you pull those billions of dollars of resource out of the ground cost effectively? And we haven't shown that yet, and we're not at the stage where we want to do that per se, because we're very comfortable. If you look at the work that IHC Robbins did in the JORC resource, the mineral resource estimate, they effectively said that this is an economic project. The cutoff grade is lower than the grade we have. So we feel comfortable that we've got an economic resource. But what we do know from the industry is that you really want to propel your early stage economics. So if we can find 6-7% grade at surface type resource that will feed into the first 5-10 years mine life, we know Koko Massava is going to give another 60-70 years of mine life. But you'll have paid off your capital, you'll be cash flow positive, you'll be free of any debt, etc. And it just gives you so many more options. And we've got so much tenement to explore that we don't feel it's necessary for us to move to a scoping and feasibility at this stage. Now, have we been hurt by that? Possibly, but I think it's the right thing for us to do. We don't need to rush into proving that we've got an economic project at this stage, because we've still got a lot of dirt that we think will add into it. So it is frustrating because, we have, if we get the economics right, these are $1 billion plus type NPV projects. I mean, it's massive. So there's huge opportunity, and we just hope shareholders will stay the course, and we're doing things as cost effectively as we can. But we're just not going to change tack to try and get a sugar hit. We're looking to do this systematically and professionally.
And I think that's right. You've got to get the foundations right. You've got to do it systematically. And these are massive projects. Final question, we're running out of time. Just like your views on the heavy mineral sand space, short and long term, because of course it is all about supply and demand as well. What is your view on that, Andrew?
Yeah, if you look at mineral sands, the products, as I said, titanium oxides and zircon, they're really life products. I mean, as middle class in the world is expanding, these product demand increases. As white goods are being used more prevalently across the world, people's standard of living are increasing. These products demand will increase by 2 to 3% per year. So we think that the supply demand curve is moving in favour. And I think the next 2 to 3 years will be really positive. Now, what happens long term, I don't know, because what happens if your price increases, as you'd understand, you get a supply response. I don't think there'll be a massive supply response, but time will tell. But certainly in the next 2 to 3 years, we think there'll be a kick up favourably in the commodities that we're hunting. And look, heavy mineral sands has been an unloved space on the ASX for a while, basically. We're not the gold space at the moment. We're certainly not lithium of a few years ago, but hopefully our time will come. So
your time will come, Andrew, and it was a fantastic presentation. Thanks so much for joining us on the presentation with your presentation today.
Thanks, Kerry. Thank you.